Hello. I hope everybody's having an awesome weekend or is going to have an awesome rest of the weekend wherever you may be. This is 50 Pips, 4th, 5th, 2014. Not making any trade calls recommendations because you and only you're responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept all disclosures, disclaimers, understanding that we're just performing some technical analysis in a learning context for educational purposes. Okay, guys, what's going on here? So I think first thing going into the week, and again, I'm going to read a bit of the calendar for the week. I don't want to be boring, but I think it's really important. We've been stuck in pretty much chop ranges across the board, and basically we're going into this week that's going to be very interesting because not only do we have a lot of overnight data coming out in the various sessions, but we're starting today with the HSBC with the manufacturing PMI, right? But on top of that, what we have is we have a bunch of central banks speaking, right? So we've got on Tuesday, we've got the cash rate out of Australia with the RBA statement, okay, which is clearly going to be interesting. Then, we've got a whole number of other data still on Tuesday, but still we go on Wednesday. We have Yellen speaking again, right? Then we're going into Thursday. We've got the BOE on the wires. We've got the ECB with the ECB press conference. Then we've got our RBA monetary policy statement, and basically, and so goes. With unemployment data out of Canada, JOLTS opening out of the US. So again, there's really a lot of event risk. So let's hope it's going to be an interesting week with a bit more move, and hopefully some breakout out of these ranges, right? So what I want to do is I just want to look at some blank charts this week. So let's start looking at the ES. What's going on at the ES? So basically, we've been discussing about the fact that we're just stuck, right? 1900, 1850, 1800. And you see that pretty much not a lot is happening. So clearly, it looks like we're starting to see some signs of weakness, right, at highs. But again, don't be fooled because every dip we keep on getting very, very aggressive buyers. So I think still in terms of the edge going into the week again is to understand that you'll probably have a better chance being active at the extremes. So 1900, 1850 and 1800, and again let the charts guide you and let the levels guide you. But again, we could see very, very quick moves, but don't forget that we're still stuck in this chop range. We've been in this chop range pretty much for the whole year. And unless we get a sustained break outside, what we would expect is more of the same, right? So high 1900, mid pivotal for momentum and flows 1850s, and low 1800, right? If you look at something like the YM, also on the YM, you can see, we're hovering at these highs. It seems like we need to fail from higher levels, but there are signs of weakness coming in. But again, don't get fooled. I think it's going to be very interesting if we do break new highs for the year, if we can hold them and not, and those will probably be more interesting shorting opportunities than here. But we have to respect the fact that the markets seem to be struggling a bit, right? And let's look at the NASDAQ, so NQ. Again, NQ's been leading a lot of the time. What's interesting is we talked about the fact that we were pressing down. And now the big question is, are we going to, has this been the bottom that's going to give us the next move higher, right? Whether it's going to be a symmetrical move or not, we don't know. But still, is this going to, is this going to be the move higher, or are we indeed going to, these whole series of tops here, are they going to hold, and are we going to continue to press lower? But again, don't be surprised if we break back above this resistance zone to see a very aggressive move, not necessarily back to new yearly highs, but back to complete this move back all the way into the 3690s, etc. So clearly we have to respect the fact that it seemed that some weakness is coming on. But again, don't be fooled. There's a lot of event risk this week. Let's see what happens, okay? So on the Forex side, what's going on Euro? Again, Euro, if you look at the even on the daily close, very bullish. And what we would expect here, you would expect to see some kind of gap up opening to take out some stops to the upside, not necessarily a really aggressive traction, but you would expect to see some kind of gap up. But right here we're stuck, right? We're hovering at highs and we're waiting for Super Mario on Thursday. So that's going to be interesting, but keep in mind that even if you're looking at this broader range here, right, it's still a very tight range, right? It's been very, very tight. So keep an eye on what's going to happen going into Thursday, where we are. Keep in mind what happens on Thursday. And again, don't be fooled into complacency, right? It's not because we've been moving in 40 pip daily ranges or pretty much 100 pip range for a while. You know, here we were stuck from that whole gap down. You know, this is pretty much 120 pip range right here. You know, don't be fooled. Sooner or later, the volatility will come back. And especially when you're sitting at extreme levels, you don't want to be caught on the wrong end of the trade without a stop, right? And thinking it's going to come back because it's been very, very quiet. It could pick up, and it does. And when we get breakouts, they don't necessarily have to come up back, right? So keeping in mind that the risk, I think there's more downside, even though it looks like it needs to coil higher and it wants to attempt to move back into those 39s, 39.50s, maybe 140s, there's clearly more risk for velocity of move to the downside. Okay, so pretty much right here, what you'll be seeing is that we're stuck at those pretty much 39.50s to the upside, and then you've got that whole 36.50s to the downside, and the tighter range is, you know, 39 and 37.70s. Chances are into that ECB or on ECB, both of those will try and clip stops both sides of that. But again, unless we see a move and a hold outside of the broader range, much to do about nothing, and still in line with all the previous discussions and outlook we've had on Euro from the previous recordings, right? What's going on cable? Again, everybody's been wanting this to die and stubbornly short, and this has continued its grind higher in a very, very nice fashion. You're extremely orderly to the upside, really. The focus is what's going to happen now. You know, is it going to make it to those 170s everybody's talking about? Like at every single level we've had till now, you got a bunch of people saying, oh, it can't go any higher, it can't go any higher. But again, I would not focus, you know, on what people feel or think. I would focus on the levels and on the chart. So right here, as long as we hold this breakup point here, and you can see this was a very, very strong resistance, defended, and we struggled ahead of it, you know, into those 67.40s, 67.50s. We had a lot of chop, but as long as we hold above this, especially from a day closing basis, I would expect us to continue to try and grind higher and move back into that 170. You know, on any sell-off, again, this has also been in a relatively tight range. On the sell-off, what I would be focused on, and you can see it pretty clearly on the 4-hour chart, right? If we move below those 67.40s, you know, keep an eye on these offers that were here, these bids that were supporting all the way into 66.40s, right? As long as these bids are still there, then it's going to be difficult for this to really get traction to the downside. If this lets go, then I would not be surprised to see maybe, you know, 200, 300, 400 pip correction maybe. But at the moment, it's still looking bid, it's still looking supported, right? What else have we got in terms of chart? I think a lot of people keep on being stubborn, wanting to trade Aussie. And Aussie, we've discussed about Aussie, is pretty much stuck in a range, right? And even though, and keep in mind, there's a lot of RBS stuff on the wires here, even though we're catching a bit of a bid, you know, this could move very, very aggressively. We've got that 200 DMA, etc. Right now, what I would be focused on is this whole move back up into those 94.50s, right? And you see that we're stuck in this previous resistance support zone. So as long as we hold this, and as long as we hold that dip low from Friday from a daily close perspective, we could see price continue to try to accelerate higher and move in extensions back above that 94.50. However, if that doesn't hold, I would not be surprised to see a quick move all the way back into the 90s, 90.50 level. Again, our outlook for this is, broadly speaking, to stay relatively range bound in a bigger range, but that's what I'd be looking at in terms of Aussie. And then let's do one more pair. How about euro yen, right? You know, a lot of people are getting, again, talking about euro yen. Why isn't euro yen moving? And if I can find it, if 50 hasn't gone blind. Okay, right? And basically what we were talking about, this euro yen, and we've discussed this a lot in the past, is basically that we're pretty much range bound here, right? We're stuck, we're range bound. And again, this is really, as far as I'm concerned, you know, the pair that's highlighting the indecision across the board here. So unless we really start to see daily closes below these lows and we get some acceleration, or we start to see daily closes above these highs and start to see acceleration, you know, this is pretty much painting the picture across the board. There's not a lot of new information in the market. The market's still a bit hesitant also because, you know, we've got a lot of geopolitical risks there. Don't forget to keep that Ukraine's still there. We might get something pop out on the wires anytime next week. So unless we get a move, you know, a strong move, we're likely to continue to chop in a fairly range bound scenario. And this chart is highlighting what you see across the board, that even though, you know, we saw it on euro, even though you're stuck in these chop ranges, when you break out, whether you break to the upside or whether you break to the downside, you've got other supports and resistances waiting. So we're kind of stuck in many ranges inside broader ranges inside broader ranges. So it just still can be very, very choppy. It's just, you know, the markets move in cycle. They'll come back, they'll start moving again. It's just a question of being patient, right? So that's what we're looking at going into the week. We hope that with all the news, all the event risk, and especially with the central banks, we'll get some volatility pick up and we'll see some sustained moves. But as usual, we have to play the card we're dealt when we come into the office every morning, right? So we'll have to do the best we can what the markets decides to give us, right? Again, if you like the content, if you enjoy these, don't be shy about sharing them, subscribing, retweeting, whatever. I wish everybody an awesome rest of the weekend wherever you may be. And I'll see you again bright and early for London Open tomorrow. Have an awesome one. Thanks for listening, guys. Bye-bye.